morning, traders. Alla Peters on this beautiful May 24th. Let's take a look on the markets and let's see what's playing out this morning. This is a trade that's under progress right at the open. Where in the world is this coming from? It's coming from Fibonacci reversal zone. Trend inception. This is a trade that reached key Fibonacci target. Knowledgeable trader moving his stop outside of break-even and scaling out carefully. What is the problem with the market? And what has happened in the trading room this month? Take a look. This is a chart that's been present in the trading room since early May. Market had been flawless at the start of May. Trend inception. Institutional reversal zone. May 3rd. Flawless Fibonacci number. 2600 area. You want to trade with institutions and not against them? Buy at trend inception. May 3rd, you do not walk away from the screen. You are all in with institutions when rules are met. The following week, we are at trend inception at the end of the minor trend. Buy at support, not into resistance. Look what we've been dealing with the last 2 weeks. Overextended bullish rally, and every single time I warn you. When price at resistance, monitor for short. When price at support, monitor for long. This morning, instant opportunity at reversal zone on little junky charts. And as I warned you, respecting this as your target and moving your stop outside of break-even is the key. Look at that. Ultimate reminder. Fibonacci will always keep you on the right side of the market. If you play by the rules, the sky's the limit. Trail is not placed in speculative place. Trail is placed in perfect place. Price been frozen here for the last 10 minutes. Price reminding you, speculation in day trading will never ever work. Knowing where to take your profits off the table does. Exact same thing you're witnessing on 1-minute chart on S&P is happening on target. Look at that. Phil, please pay attention. Target in a whole lot of pain. This is not the place to buy. This is a place to take profits off the table and moving your stop outside of break-even. Not just S&P day trading charts, as again chart is not on 1 minute, trade converted to 1 minute so you can see the accuracy of the method. Exact same thing as you witnessed happening yesterday on oil. Highly encourage you, if you missed the event this week on oil, pretty please review. This is a chart that's present in the room for weeks. Yesterday, well before news release, we discussed this is not the place to buy. This is the place to monitor for sell-off. Well before the news. And that's where price sold off. What was the problem? This Fibonacci support. Oil struggled at this support for over a day. Bearish news did not mean a thing because this support was causing a massive problem, which again last week was key Fibonacci resistance. And that's what you're witnessing in front of you right now on S&P. Anyone's surprise should not be. In the course you learn that this is your key Fibonacci target. In the course you learn to the tick to respect this target. Clear on that? Life is magic if you play by the rules. When you're dealing with overextended bullish rally and you choose to disrespect this as a target, nothing good is possible. This was expected. It's a beautiful thing. Price reminded you every single tick in day trading matters. Clear on this example? No surprise. Every day, every time, I teach you and show you the accuracy of the method you can apply to any instrument, any time frame, any platform you will choose. This is exact same thing that happened on Euro. Euro went into free fall, reached reversal zone. Do you remember where sell-off had started on Euro? Let me remind you. This is a reminder of Euro. Remember Euro at 24.23? And that's what you just saw on S&P. Euro right now at reversal zone. You know the rules, you know what you're monitoring for. And that's S&P. All the same formula. Identical structure. Identical formula. Identical Fibonacci tool. On target, on oil, on S&P, on Euro. No surprise. Only you can identify what's appropriate for you and your account size. Once you learn the method, that's the key. And that's a trade at the open. And that's where it came from. So, right now, price collapsed as I warned you. This is not the place to buy. Price is heading to drastically lower levels. It's a beautiful, beautiful thing. What is the problem? When it comes to day trading, you are at reversal zone. Again, if you missed the events of yesterday, I highly encourage you, view the video on YouTube. Again, at reversal zone as a day trader, your bias is bullish. Again, as a day trader, your daily quota met and you're out to the tick. As a day trader, you know extremely well. If buyers will step in again and you will choose to take second trade this morning, you better be extremely careful because we are in holiday market conditions. If you meet your daily quota by placing one trade and you add lot size, the sky's the limit. By the end of the year, you can trade 10 lots. By the end of 2 years, you can trade 20 lots. Rules are met, take a trade. Rules are not meant, do not touch the market. No matter what chart you trade, this is always very crucial moment on S&P and every single instrument. Prior, rules for all had been met, not now. As we know extremely well, price collapsing to here, it's a gift. And again, exact same thing you witnessed on S&P, exact same thing that's happening on gold. Identical Fibonacci levels. So ladies and gentlemen, this is the month, this is trade number 20. As you saw, decision point 2 had been reached. Every single trade, different stop, different target. What trade you choose to trade, absolutely up to you. This trade reached decision point 2. Everyone clear on this? How many hours had trading been open? Less than 22 this month. Multiple times I warned you this month. Only decision point 1 is an option. On this trade, it was different case scenario. And again, before trading room open, we discussed with students. We expected this sell-off as we are dealing with institutional levels. So, what is absolutely crucial next? this support. This sell-off was expected. This is institutional chart. This support this morning is a key, where buys kept coming from for the previous 2 weeks. So, this was expected. And again, day trading chart. Levels identified since early May. So here we are with students discussing the trades. Pablo, complete beginner trader, met his daily quota this morning. Done. If complete beginner trader can do it, so can you, so can anyone. Please listen to Pablo on the website. If you come to learn, all you have to do is click on Learn, review the course information, and listen to students like Pablo. When Pablo came to the course, he never pushed a button on his computer. He dedicated his time and effort to mastering the rules and mastering trade placements. New course starts Tuesday after Memorial Day, May 29th. All classes are live, group sessions 8 weeks, private mentoring 16. Most important part of the website, what graduates and students of the course have to say about course. Pablo, all the way on top, holding the bar extremely high for everyone. Listen to graduates from beginner to hedge fund manager. Listen to graduates who trade any instrument they choose. What you choose to trade, absolutely up to you. And never hesitate to contact me. 925-257-4298 or info@fibinstitute.com. In the course you learn sniper's mentality. In the course you learn to trade with institutions and not against them. Sell-off was expected, came from key institutional resistance. And that's the market this morning, and that's what happened in a trading room this month. Fibonacci levels identified weeks in advance in a play entire months. So here are the comments in the room from students. Jean, bearish call spread, 15 points, 5 lots so far. And as you could see, camaraderie between the students is incredible. Do you want to be day trader like Pablo? Do you want to trade options and day trade like Jean? Choice is yours. And that's the core of the course. What you choose to trade, absolutely up to you. Look forward to seeing you in the course.